everyone, and welcome back. We're diving deep into something that's got everyone buzzing this week, the Reserve Bank of Australia's recent rate cut.
Yeah.
First one in over 4 years.
Big news.
Yeah, big news. So we've got tons of reports, analyses, social media chatter, all that stuff to look at.
Yep.
The big question, is this rate cut actually good news for us or what?
That's a good question to start with, because it's easy to just see headlines right and get caught up.
Right.
But it's important to understand what's really going on. So the RBA cut the official cash rate by 25 basis points.
Okay.
So that's 0.25% for those who like plain English.
Right.
Which brings it down to 4.0%.
Yeah.
So what does that mean for you? Well, if you're a homeowner with like an average mortgage, you could see your monthly payments go down.
Oh, okay. That's good. But I'm already seeing some chatter online that not all lenders are passing on the full cut.
Right.
Didn't Finder find something interesting about this?
Yeah, they did.
Okay.
Finder's analysis showed that 2/3 of Australian lenders, wow, that's a lot.
Yeah.
They haven't said they're going to match the big four banks and pass on the full rate cut.
Oh.
Now, the big four, they have most of the mortgages.
Right.
But that still means a lot of people might not get those benefits right away.
So it's not as simple as everyone's payments are just going down.
Exactly. And this is why it's so important to really look around. Don't just assume your lender's going to automatically change your rate for you.
Right.
Refinancing could be huge. Like you could save thousands.
Wow.
Even Finder's head of consumer research, Graham Cook, said borrowers have every right to be upset if their lender isn't passing this on.
Okay.
He's really encouraging everyone to, look at their options and not just settle.
That's a good point. So why did the RBA even make this cut in the first place?
Well, they're walking a tightrope.
Yeah.
They want to stimulate the economy, but they don't want inflation to go crazy.
Right.
Economists call it a soft landing, where inflation goes down without causing a recession. This rate cut, it's supposed to encourage people to borrow and spend money.
Right.
Which can boost the economy, but it can also make prices go up.
So it's a balancing act.
Definitely.
So they're being cautious, but there's some risk involved. It makes you wonder, who really wins from this?
Yeah.
And who might get left behind?
That's where it gets interesting. On one hand, lower rates usually mean more activity in the housing market.
Yeah.
Buyers feel better about lower repayments, so that could push up demand and prices.
Right.
So current homeowners might see their property values go up.
Okay.
But this also makes it harder for first-time buyers. They're already struggling with affordability.
Yeah, it's true. That's complicated.
So it's kind of a double-edged sword then, right?
Yeah.
Could be good for some, not so good for others. Makes you wonder about the bigger picture, too, not just housing. Some analysts are even saying we could see a bunch more rate cuts this year. How would that affect people? Yeah. Some major banks are predicting up to 4 more cuts this year.
Wow.
And if that happens and lenders actually pass those savings on, that could be a lot of relief for people with mortgages.
Right.
Even a small percentage drop on a big loan can add up to tens of thousands of dollars saved over time.
That's a lot of money. Could that lead to people spending more, boosting other parts of the economy?
It could. We talked about consumer confidence, and rate cuts can really boost that.
Yeah.
When people feel better about their finances, they're more likely to spend on things they don't absolutely need.
Okay.
And that's good news for businesses like retail, hospitality, tourism, you name it.
So it's like this ripple effect that goes beyond just houses and property. But wouldn't more spending also push inflation back up?
Yeah, that's the thing.
Wouldn't that kind of defeat the purpose of the rate cut?
That's the balancing act the RBA is always trying to pull off. Like steering a ship, you constantly got to adjust course, The RBA, they're always watching things like inflation, employment, consumer spending, all that to make sure they're on track.
So they've got a lot to think about. Are there any other things besides spending that could throw them off?
Oh, yeah, for sure. Australia's economy isn't in a bubble.
Right.
Things happening globally, like trade wars, political stuff, even climate change. They can all impact us regardless of what our interest rates are doing.
So it's this whole web of things the RBA is trying to make sense of. It makes you appreciate how tough their job is. But let's bring it back down to earth for a sec. What could all this mean for specific parts of the economy? We talked about housing. What about retail or manufacturing?
Okay, so retail. We already touched on how confidence and spending can be affected by these cuts.
Right.
So if people have a bit more cash because their mortgage payments are lower, they might spend on things they've been putting off, like new clothes, eating out, vacations.
Makes sense.
And that means more sales and revenue for those businesses.
Yeah. What about industries that aren't as directly tied to spending, though? Like manufacturing, would they see any impact?
It's less direct, but there's still a connection.
Okay.
Like lower rates can make it easier for businesses to buy new equipment or expand.
Right.
That can then lead to more demand for materials and manufactured goods.
Okay.
Plus, if people are spending more, like we talked about, that also means more demand for stuff manufacturers make.
Right. So even industries that don't seem directly affected can still feel it. But let's talk about some downsides for a minute. We mentioned that rising house prices could make it even harder for first-time buyers. Are there other risks with these rate cuts?
Yeah, that's a really important point.
Yeah.
Lower rates can boost the economy, but they can also cause what's called a debt bubble.
Uh-oh.
If it's too easy to borrow and people take on more debt than they can handle, it can make the whole financial system shaky.
Right.
If rates were to go back up suddenly, a lot of people could have trouble making their payments.
Yeah.
And that could lead to financial problems.
So it's not all good news. People need to be smart about their money no matter what the RBA does. But could these cuts help us avoid a recession? Wasn't that part of the goal?
That's the hope. They're trying to encourage enough borrowing and spending to keep the economy growing.
Right.
But like we've been saying, it's a tough balancing act.
Yeah.
Too much stimulus, and you get inflation too little, and you might not stop a slowdown.
Feels like we're on a roller coaster. But before we get lost in all the economic stuff, let's think about what this means for the average person. What can they actually do to deal with all this?
That's the key question. First, don't panic.
Okay, good advice.
Easy to get caught up in the scary headlines or get excited about potential wins.
Yeah.
Instead, focus on what you can control your own choices.
So be proactive, not reactive.
Exactly. Look at your budget, see if you can cut back spending or pay down debt.
Okay.
That's always good to do, but especially when rates are changing.
Makes sense. Get your own finances in order before doing anything big.
All right. And if you own a home, refinancing your mortgage is definitely worth looking into.
Okay.
Even a little decrease in your rate can save you a ton over the life of the loan.
So refinancing, right? You mentioned that before, and that shopping around and comparing is super important. But with so many lenders out there, it could be like, where do I even start?
Yeah, it can be overwhelming.
Yeah.
That's where places like Finder can help a lot.
Okay.
They've got those comparison tools and experts to help you find the best deal for you.
Yeah.
And don't be afraid to negotiate with lenders. They want your business right.
That's true. So knowledge is power when it comes to getting a good rate. But let's talk about the big thing that's coming up, the election. How do you think this rate cut will affect things politically?
It's funny how economics gets political, right?
Yeah.
And the timing of this rate cut is definitely interesting, right in the middle of the campaign.
Yeah. It's like a wild card.
Yeah, exactly.
So how do you think this will affect how voters see the government's economic management?
Well, the government, they might try to say this is a sign of a strong economy,
Okay.
that their policies have made rate cuts possible. They might talk about how inflation is easing and unemployment's pretty stable. Like, see, we're doing a good job.
So a potential win for them, but wouldn't the opposition have a different take on it?
Oh, totally. They can say these cuts mean the government was too slow to act,
Okay.
that the economy is actually worse than they're saying. They might point to things like the cost of living going up, housing being unaffordable for a lot of people, and say the government hasn't done enough.
So it's kind of like this rate cut is ammo for both sides.
Yeah.
It depends on how they spin it. Should be interesting to see what happens during the campaign. But politics aside, are there any legitimate criticisms of the RBA's decision?
Well, in economics, there are always different opinions. Some critics say the RBA focuses too much on inflation.
Okay.
And not enough on other things like wages, which haven't really grown for a lot of people. They say lower interest rates might not be enough to help the economy if people aren't making more money.
So it's complicated, no easy answers. The RBA has to think about so much and try to find a solution that works for most Australians. But at the end of the day, it's individuals who feel the impact of this rate cut. What would you say to someone who's feeling overwhelmed by all this economic news and doesn't know what it means for them?
I think a lot of people feel that way. I would say first, don't freak out.
Right.
It's easy to get caught up in all the bad news or the hype.
Yeah.
Instead, focus on what you can control your own decisions.
Be proactive.
Exactly. Take a look at your budget. See if you can refinance your mortgage. Make sure your investments match your goals.
Okay.
Knowing how this stuff works can really make a difference.
Good advice. It reminds us that even though we can't control the whole economy or what the RBA does, we can still take charge of our own finances. And that's about it for our deep dive into this RBA rate cut. We've covered a lot from how the cut works and what it might mean for homeowners to the bigger picture and even the political side of things.
We've looked at different perspectives and tried to go beyond the headlines to help you make sense of it all.
Hopefully you feel a bit more ready to navigate this crazy financial world and make good choices for yourselves.
Exactly.
And remember, this isn't just about numbers and economics. It's about how these things affect real people's lives, their homes, their businesses, their ability to just get by.
It's about having these conversations and asking questions.
Exactly.
Economic policies, they aren't set in stone. They change based on what people think and say.
So stay curious, keep learning, and don't be afraid to question things. And here's something to think about now that you know all this about this rate cut. What's one thing you can do to make sure you're financially secure? Until next time, keep diving deep.